If you didn't know you could sell your house and you're buying a house, would you buy your house? No, nobody would own. They'd rent. Just that simple. Unless you're just a billionaire. So when you think about assets people own, home is probably, you think about that's the biggest one they own. But the second one's probably your life insurance policy. Because you own your life insurance policy. It's yours. I can make you the beneficiary of my life insurance tomorrow. Not even tell you. And then when I die, you get the money. That's because I own it.
Yeah.
That's what people don't understand. They think they don't own it. They do. Supreme Court Justice Oliver Wendell Holmes said, insurance is all the rights and real property.
Today's guest is basically David versus Goliath in the life insurance world. I'm talking with Rob Haynie, founder of Life Insurance Settlements, Inc., who spent 32 years pushing back against an industry that often doesn't explain all of your choices. When it comes to life insurance, most people think it's something that you just pay and keep for a rainy day. But what if you could sell your life insurance policy the same way that you can sell a house? Today's interview discusses a topic that I guarantee 99% of you have never heard about, but it's one that could change the life for you, your friends, and your family. Welcome to the show, Mr. Rob Haynie.
Super interesting to kick us off. You just said that most life insurance companies, they don't want you guys to be known about because you said you could actually sell your policy. I feel like this is a great place for us to dive in.
Yeah. So a life settlement is basically, it's really the sale of an existing life insurance policy by an individual who owns it, who no longer wants it, no longer needs it, or most commonly today can no longer afford it. And they say to themselves, okay, what are my options? And traditionally, the options are you can lapse it, you can surrender it if you're fortunate enough to have any cash surrender value. You can borrow money from friends, you can reduce the face, you can borrow money from the life insurance company. And our option, called a life settlement, is the opportunity to go out to a third-party investor and buys the policy, takes over the ownership and beneficiary rights to the policy, and pays the premiums until such time as you pass away. The difference is you get money today. The association I belong to, Life Insurance Settlement Association, does a data collection survey. We've done 4 of them. And every year it reports back to us what is the difference between the cash surrender value and the settlement value. And every year we've ranged from 5.2 times more to 7.8 times more. So split the middle, we'll call it 6.5 times more. So if you're going to surrender a life insurance policy, a $5 million policy for $100,000, more times than not, you're going to get $650,000 if you sell your policy. And we think that's a decision that should be left up to the seller, right? We think that the seller should make the decision, what's best for him or her. I will be proud to report that 99.99% of the time they elect the $650. And then they use that for what is more important to them today. So as a life insurance producer, you think about that. If I'm recommending this option to my client, the client, instead of $100,000, now $650,000, they more or less would hand that money back over to them. They'd put them into a position of maybe buying them an annuity, for example. They would have 2 things to be achieved. A, they'd make a commission on that sale. The client would go from having payment for the policy to income from an annuity. And the client would get credit for that. The agent would get credit for that in the sense that they provided them the means to have this additional money. So when they talk about, the life insurance companies, I don't think they get up in the morning, they say, let's not tell anybody about life settlements, but they don't do anything to really show me that they really want to help people. Because when you sell your policy in my marketplace and you get the contracts, we are mandated by the State Department of Insurance to put in there all the other inferior options that you could avail yourself of. So it's say, Wayne, instead of $650, you could just let it lapse for 0 by using the cash surrender value to pay the premiums for another 6 months. Nobody does that. Nobody just surrenders it for 100 when they get $650,000. So we think, my argument has been for the longest time is I think insurance companies would be better off to tell people about the availability to sell the policy when they're at the kitchen table or at the boardroom with someone who's 35, 40 years old and say, later on down the road, you might be able to sell your policy. And the reason we say that is, who is going to say, yeah, I'm not going to buy it now that I know I could sell it? So a word that I use a lot is monopsony. The insurance carrier has a monopsony, meaning I sell you the policy, you use it for as long as you want to use it, and now you want to sell it later. Now, like your surrender value, you have to come back to me, and then I'm the originator, so I'm the one holding the monopsony, and I say, okay, here's the cash surrender value. That's it. It's non-negotiable. I can't raise your cash surrender value. I can't lower it. It is what it is, and that's your decision. Instead of a competing marketplace, which drives the price up, which makes life insurance more valuable, and I think you'd sell more life insurance because of it.
Yeah.
So that's kind of my simplistic argument of, what is a life settlement and how does it work? Right now, we sell about $5 billion, give or take $1 billion every year for people in the United States of America. That is nothing. And what I mean by that is nothing is we have backed into the ACLI fact book. And the ACLI fact book tells us that about $112 billion of life insurance every year on people just over the age of 65 or older will either lapse or surrender their life insurance. That's on top of the $5
Per
billion we
year.
sell. Per year.
Wow.
Per year. Here's the explanation for you, Wayne. You'll like this one better. 2008, 2009, the financial crisis, the subprime mortgage collapse, all those banks were going under, live on television almost. And the government stepped in and created, the too big to fail TARP money, where they gave all the banks all the money they needed to stabilize the economy. And it worked. Do you remember how much money the insurance industry got? Insurance companies, life insurance companies?
No clue.
None.
Real?
You know why? You don't need it. If your business model is I write 100% of the policies and 90% of them never go to claim, I keep all the money you paid into that, whether it's for 10 years or 5 years or 1 month or 18 years or 30 years, that's all mine. Nobody's died. I keep. And the other 10% that pay out a death claim over time, they've invested that money wisely, as most do. Most insurance companies own real estate. They literally just buy real estate.
Wow.
And they just sit on it. It appreciates. Whether it has COVID or the collapse in New York. How many times did, at the end of a crisis, have we heard, New York is done? It's over. No, it's never going to recover. And now we're going to elect a different mayor, and that mayor is going to single-handedly drive New York into the gutter. Well, COVID didn't do it. The financial collapse didn't do it. The stock market crashes that have happened over periods of time haven't done it. So insurance companies know that.
Really?
They know investing in real estate. So my goal is to reach out an olive branch to the insurance industry and say, we need to work together. Because I think if we could sell a few more, we're not going to sell everybody's policy overnight. We're not going to create, disturb the balance sheets of these large life insurance companies. We're not. But I think we can help them sell more policies and raise awareness of the fact that life insurance is really a valuable tool, not only for estate planning purposes or for protection, but also as a safety valve later on in life. Because you want to think about retirement, what you forecasted 15, 20 years ago you needed for retirement,
Yeah.
and now could need today. They're two different numbers. Actually, two different numbers. So this helps stabilize that. They can take it, $100,000. It was good for retirement to add to retirement nest egg, but 650 is better. So if you say to yourself, where would you do with the 650? Wisely invested, that could last another 3 or 4 years to kind of maintain your level of comfort and your standard of living.
Rob, this is wild to me. Let me ask you a couple questions so I can see if I'm tracking. First off, define for us surrendering a life insurance policy.
Great question. So if you own a life insurance policy that is what they call a permanent policy, okay, not a term, but like a universal life or any of the universal life, GUL, IUL, et cetera, or whole life, you are paying a premium that not only goes to pay the cost of insurance, keeps the death benefit in force, but also a saving mechanism inside life insurance policy that's growing your cash value. A lot of times it's reported that cash value will grow until such a point you don't need to make any more premium payments, and you'll just use that cash to take that policy on down. When I first got into the business in like the mid-2000s, they had what was called vanishing or disappearing premium. These were all forecasted to operate just like I told you that they would, except for one thing. when the interest rates went crazy. Then all of a sudden the premium payments that you needed to make and the amount that you were actually gaining in your surrender was not what it was illustrated to do. So you needed to pay more. So people went from having to pay $7,000 a quarter to $9,000 a quarter. And then it was $14,000 a quarter. And then people were like, wait, what's going on? Well, that's what they do. So when you think about surrender value, at the end of this magical, mythical rainbow that is your life insurance policy, and you get to the point where you just don't want it anymore, that's your first life settlement offer. It just comes to you in the form of the life insurance company, the monopsony we talked about earlier. Here it is. Your cash is listed. You can use the cash and pay the premiums with it. So it's yours. But a lot of people get confused. They think, okay, I've got $1 million policy and I've got $266,000 worth of cash. So when I die, I'm going to get $1,266,000. No, you're going to get $1 million. So you've got to use the cash or you lose the cash. So you've got to use it to pay the premiums. So that's why we try and eclipse the cash surrender value. Otherwise, there's no offer to be given. If I can't beat 266, then that's going to be your best offer. And that happens. Not everybody qualifies. You have to be older. You have to have a life expectancy somewhere around 20 years or less. And there's got to be someone that believes.
So is that surrender? Sorry, is that basically you're now finishing your policy? You're saying, I'm done with it. Give me all of the cash value that exists.
And the policy ceases to exist. You have surrendered the policy. It doesn't longer exist. No one is getting trailer commissions. Whereas a life settlement, even if I give you like a crazy example, 266, and I give you 300, not much more, but it's more. Now the policy stays in force. So if you were an agent receiving income from that every year, you're going to continue to make that. And at some point in time, there's going to be a death benefit played. That's the reason life insurance companies, I imagine, I'll never say it, don't like it because they're not interested in death claims. They used to have years and years ago, well before I got into the business, persistency awards. Wayne, you wrote 62,000 policies and 65% of those have stayed in force until now, and you're our persistency champion. You've kept those policies on the book. You've kept those premiums come, which sounds good if you're an insurance carrier. It's more money coming into you. But the fear is as you get older, you get closer to dying. And when you die, the death benefits come.
Of course.
So that's the problem. Again, not a disconnect. I don't see any articles written by life insurance companies say, hey, I hate life settlements. They're not going to say that. But they're also not going to say they love them. And I think that they should.
Yeah. Interesting.
Obviously, we like life insurance.
Yeah, clearly. But it sounds like it's this argument of we're going to have to pay out more at the end, right? If we sell this policy to somebody else that will then continue to pay it, they now become, I guess, the beneficiary. Let's just say, right, it's my life insurance policy. I'm paying into it every single month, every single year until I decide I don't want it or I can't afford it. Now I sell it off to you, Rob, just for example's sake. Right?
Yeah.
And you keep paying it. And then if I die, you get paid out.
And let me add something to that. When I pay it, now I'm the buyer, we're going to pay it more efficiently. We're not going to overpay. We're going to pay just the cost of insurance, just enough to keep the death benefit exactly where it's at level. There's going to be no more building cash value. We are going to use the cash to pay the premiums. So it's going to be a more efficient way to pay the premiums. Because when you think about a life insurance policy, and this is just true of any of us, I see illustrations almost every week that I don't understand. And I do this for a living.
Wow.
I literally don't understand what is happening. So when you think about the average person, he or she, they don't know what they're looking at. They don't know what they have to pay. They think, oh, I have to pay that. That's what it says. It's not true. You don't have to pay that. But they're afraid to ask. And of course, I don't know if the agent's going to help them, may or may not. The problem with that is I'm not even sure the agent's around anymore. The agent that's on the policy, he or she's gone. They're orphan policy holders. They may have a new agent that comes on. They're just kind of monitoring the policy, not really interacting with the client. They're not a client per se. They don't trust them. They don't know them. So that's kind of where we're at. Again, there's so much opportunity. Let me just kind of scare you with more facts.
Please.
Okay. So we buy $5 billion that I told you about every year, and $112 billion for people who are age 65 lapses or surrendered, in addition to the 5 that we sell. Okay. Now let's be honest. Not all 112 for people who are 65 is going to qualify for a life settlement. It's just not possible. It's all mathematically impossible. So I like to say, let's make it 25 billion. Let's just make it easy. We buy 5, 25. Okay, 25 is eligible, but just nobody knows. They don't know. Their agent doesn't tell them, whatever the reason. If we could just double the industry, double it, which is just mean just get 5,000 more, $5 billion more of death benefits sold than we currently could have, the awareness would grow and grow and grow. We've been stuck there, relatively stable at that number for about 7-8 years. And the growth you would think would come, but it's and the reason is because there's been more of a move towards direct to consumer. So they're educating the consumer vis-a-vis television commercials, radio and Sirius satellite, and they're getting people who don't have any guidance, no wealth planner, no estate planning attorney, no life insurance producers. I told you the orphan policyholder. So they're kind of calling direct. Those policies typically are smaller. So while we're probably closing more transactions on an annual basis, the death benefit is smaller.
Yeah.
Just to give you an aside, when I first got into this business in 1993, it was the viatical settlement industry. We weren't selling people's policies that were high net worth seniors. These were people with chronic or terminal illnesses, mainly HIV and AIDS. The average face was $60,000. That was it.
Wow.
60,000. And we were selling probably in the summer of 95, I think we were up to 75 to 100 deals a week, every week. And the reason was it was direct to consumer, but it was also word of mouth.
Sure. Yeah.
So when you think about the people afflicted with HIV and AIDS, you're really dealing with people in the LGBTQ community.
Yeah.
They were dying. They needed the medicine to get the drugs to stay alive. And many of them stayed alive past the cocktail and the protease inhibitors, and they're alive today because of the money we got them, literally. So we kind of saved a lot of lives at that point. The market immediately ceased to exist at the end of 98 when it was a foregone conclusion that if you took the medicine, you weren't going to die of AIDS anymore. Luckily, and I say this, we'll talk about a little later, the film, that's when the light bulbs went off in the investor class and said, wait a minute, what if we bought life insurance policies on people that were older? Because they would be bumping up against mortality. So there wasn't that terminal illness factor, and disease would get them, just simply old age. And that turned on the switch, but we started to market to the financial planning community. So to really get in the weeds, but I think you'll like this, the estate planning attorneys and financial planners all realized their clients, they had control of their clients. The average face went from 60,000 to about 3 million.
Wow. How long of a time span did
Okay.
it change?
In like two years.
Wow.
Because that's who was not, they bought too much insurance. They didn't need all that insurance. Like, what am I doing with this insurance? Why do I have so much insurance? I went out of some of this insurance. That's kind of where they were. So they sold the policies that were the ones that were performing the worst, and sold those for cash. And that's kind of how the life settlement market began. So here's the difference. The life settler, the typical life settler, the person that has a $5 or $10 million life insurance policy, is different than the average person who may own a $250,000 policy. And you say to yourself, well, why? Is there anything biologically different? The answer is no. Here's what's different. They tend to be more educated. They tend to have better doctors. They tend to be more compliant with their doctor's wishes. They tend to have a support network around them. If they said to you, Wayne, you need to go to Houston to the MD Anderson Clinic to address this specific type of cancer, they go.
Yeah.
And the result, they live about 2.5 to 3 years longer. Well, in the game of life settlement investing, that's a big difference. So that's what started happening. Now that's starting to go back from all of that was all high net worth seniors. And now we're moving into as I mentioned earlier, the direct to consumer. And that's where you're starting to see the smaller face policies pop up back up again. The people that don't have the means to go to different doctors in different places to take off work, et cetera. So it's a mix. So it's become a little harder to really understand what you're looking at, but you can kind of tell by the face of the policy what you're looking at. And that's really what's changed the market. But the problem is it's hard to get to those folks unless they're watching the 6 channels that are on TV and cable during the day, Otherwise, they don't see it. And if they don't know what a life settlement is, they can actually see the commercial and they'll just go buy them like nothing existed.
Yeah, there you go.
So that's the problem. So hopefully, Wayne, by talking to you, you're going to come up with a great idea by the end of this segment. Just lay it on me.
Absolutely. I mean, it sounds like, Rob, this is why you're doing interviews like this, right? To increase
Absolutely.
the awareness so that people know they have this
100%.
option. I mean, so you mentioned that a large majority of people have too much insurance or they're paying too much, whereas when investors purchase these policies away, they chop some things out and they're paying it much more efficiently, right? Somebody that's listening,
Correct.
where do they start to figure out, do they have too much insurance and or are they overpaying every month?
Great question. So do they have too much insurance? I would seek counsel. I would reach out to someone. If it's not necessarily a financial planner, someone you can afford, an outreach inside your community to talk to. A lot of times the Chamber of Commerce will offer different people to come in and speak of financial topics. So go talk to him or her about what the life insurance, you feel like you have too much. Like when you're younger, you buy life insurance for what reason, right? If you die, your spouse is protected. If you die, your house is going to get paid for. If you die, your business
Or as an
partner has
investment
money.
is what you mentioned earlier as well, right?
Yeah. Right. Well, they shouldn't buy it as an investment, but some people actually do. The reality is things change. So now your kids have grown up. They've already gone to college. You paid for that. The house is paid off. You've sold your business. And now you're sitting there looking at a life insurance premium that is 4 or 5 times more than it was when you bought the policy 35 years ago. And you say to yourself, do I really need to be paying this life insurance? So there's things you can do. If you need life insurance, you can reduce the face. That's a very simple. If you have $1 million and you really need 250,000, that's an option because if you need the death benefit. So I would seek advice. If it's also the simplest thing to do is call the life insurance company up yourself as the owner and say, Mr. and Mrs. Johnson on the phone at Pacific Life, what is the least amount of money I need to pay you to keep this policy in force and the death benefit level? What is the least amount? And that is where you can ask them to send it to you in writing so that you have it, so that you're protected in case you send that amount in and they claim that you lapsed or surrendered your policy. Those are things that you need to do. And if you've got a universal life or a whole life policy, you can definitely pay less. No doubt about it. And it's using some of your cash surrender value to make those premium payments.
Wow. Interesting. So seek counsel. An easy way to do that is, of course, call the life insurance company. Who else would be, like, if you could give a title of an individual to seek counsel from that's outside of the insurance company, who would that be?
I think the best piece of advice I can give you, and the ones that I know really care about their clients, is look for a local elder law attorney. Talk to your friends if they know of any, and more importantly, go ahead and look at a couple of reviews and call 2 or 3 of them that are local. These elder law attorneys typically work with people with median means. They're not the high net worth people we discussed earlier, and there's certainly people that don't have enough money to buy life insurance. And they help you balance your retirement, understand if you have a pension, what your Social Security is going to be like, if you're thinking about moving into an assisted living facility, or if you're going to age in place in your home, or what financial contributions you'll need to make the house more likely for you to be able to live in it. So these are all things that elder law attorneys are well skilled at. And they are absolutely, in my understanding of them and the way I've worked with so many over the years, is they literally care. When they send you an application of their claim, it is complete. You don't have to worry about them missing one thing. They're thorough. They work for a much smaller fee than staying a estate planning attorney. And they really are there for the clients. They're local though. They don't really go stretch their wings out beyond the local community. And they tend to have a lot of people that are friends.
Nice.
They're good networks.
That's good to know. No, I appreciate it. Rob, this is super interesting. Right? This is an industry I didn't even know existed. And it sounds like the majority of people don't know this is an option. How did you originally find it? Because correct me if I'm wrong, right? You're not selling life insurance, right, at all. So how did you find this sub niche, if I can call it that?
So I call it a sliver of the niche. I say you're trying to find the needle in the haystack. We're breaking the tip of the needle off, and we're discarding the main part of the needle and just throwing the tip into the haystack. That's the life settlement. And that's unfortunate, but it's also what I specialize in. So The really long story short is I am at the gym, which reminds me I need to go every time I say it out loud. Um, and I'm sitting there listening to a guy that I know, an acquaintance that I see at the gym, and I know he's a pretty good salesperson. And he mentions to me that he's in a business where he helps people that are dying, is the way he described it to me, mainly with AIDS, sell their life insurance policies, and he gets paid to do that. And my first gut reaction was, this is easily the most ghoulish thing I've ever heard in my life. Like, I can't even believe it. Why? What does it even make any sense? But that's about all I paid attention to, and I just went on my workout. And then he says, he looks at me as I'm leaving the door. He says, you should really consider this. And I sitting there going, yeah, there's not going to be any consideration whatsoever. And then I got into my car and I drove. I know exactly where I was in Winter Park, Florida, at the stoplight. And then the light bulb went off. I said, wait a minute. You're keeping the insurance companies honest. You're making them put their money where their mouth is. These folks don't have any other option. They lost their job. In many cases, in the HIV and AIDS community, they lost their friends. They were ostracized. People just forgot they existed, and they needed help. And I said, I'm in. I remember saying that. Now, I told my mother, I didn't talk to her again for about 90 to 125 days. I told my then girlfriend, now wife, what I was doing. She thought I completely lost my mind. But I wasn't happy doing what I was in commercial real estate. I wasn't happy. So I said, I'm going to do this. I met the guy who ran the company, and instantly we had a connection, almost like we were supposed to meet. And we would work, from early in the morning to late at night, and he would tell us stories and keep us motivated. And then we grew. There was 8 of us when I got there. By the time we could build up to about 130 people.
Wow.
So we were the biggest company doing this all over the country. That's why I said there were so many deals we were being done on a weekly basis, because we were figuring out how to market this. Luckily, we had the HIV and AIDS community to market too, because they would tell everybody. And that's what kind of grew but the concept the same. The difference between then and now in terms of the structural of the deal is the same. It's a life insurance policy, someone sells, gets cash consideration, and their people move on. So I've always felt like it's been a charge. Now, I will also say this, and I'd like to say this online with you, because we are collectively, not just me, I can't take all the credit, but our industry and all its participants are combined the worst marketing people in the history of mankind. I mean, to think that 35 years later, we're still talking to someone with intelligence like yourself, and you've never heard of it. And that just says we've got a lot of work left to go. But what I love about it is it's fun. It's definitely hard. I like the hard work. I will be the chairman of the board of Lisa next year. So we can get a little more aggressive at least if I have anything to say about it. But I think it's just an opportunity to get the word out however we can. So you mentioned earlier talking on places like yours. I've looked at some of your work, and I said, here's a guy who gets it. And I'm talking about not just here, but everywhere. And your audience obviously listens to you. And I promise you, just this episode, we will convert one person. And that's all I need. Just one at a time. I don't need 10. I'll take 10, but I don't need 10. I really just want one. And from there it grows. Because once you do this and realize that you're not hurting anybody, no one's getting hurt. As a matter of fact, you're kind of just, you look at insurance companies, they're not going to get bottom line. Pacific Life was on track for a record year, but that one policy that Wayne's client Rob sold is really just out of business. It's not going to happen. I think, and I go back to what I originally said to you, if this works like I think it does, insurance companies will quickly realize that they should talk about it. They don't have to endorse it or run commercials about it, but at least make the option available. And I think people will get it. So that's why that's the short story of how I get into the business. I mean, I've been called every name in the book, and that's fine. But at the end of the day, I'm on the right side of this argument.
Yeah. Beautiful. I like that. And that's a big lesson that you shared with me before the interview, actually, is to never give up, right? In your pursuit, to anybody's pursuit. You said, right, because you know that you're on the right side of the argument.
Mm-hmm. That's right.
Just for everybody that's listening, I just want to recap a little bit here, because especially the piece of back in the day where a lot of policies were getting sold from the AIDS epidemic, right? If I can call it that. you all or the industry then was giving everybody an option to immediately get an influx of cash that they could use to pay their medical bills, to get medicines so that they could actually live and not just have to sit there and say, well, either one, I can't pay my life insurance policy, so it's going to default, or I'll just wait until I die and at least everybody else then will have money to pay for my funeral or whatever my expenses were. You're actually giving them an option to potentially save their lives. Or did I hear you wrong?
No, you heard me right. That's the option. It's like we're going to give you the chance to do what you want to do with the medicine. So to your point about medicines, if you understand, there's a movie that Academy Award winning actor and supporting actor McConaughey and Leto won for the Dallas Buyers Club. That literally contains in the movie. There's a scene when Jared Leto pays McConaughey a check from selling his life insurance policy.
Oh, no way.
Guys that are in this upcoming documentary, Cashing Out, Scott Page used to go to the Dallas Buyers Club. That's where they would get medicines from Mexico, AZT and the like, and they would sell them almost at cost to people who had money, many of them from the life insurance policy, just to buy those medications. And that is what kept them alive to where they cured it. You took the cocktail and you're alive today.
Wow.
And that's remarkable when you think about it, because nobody knew that was happening, right? We're all buying these drugs, and honestly, the drugs on their own were horrible for them, but they give people hope. But when you combine them, which is what they figured out, this one doesn't work by itself, nor does this one, but together they work. That's what saved people's life. And that's when I say back to the beginning is we are saving people's lives. Now take today, for example. We're not saving lives in that perspective, but we're keeping people in a home that they were going to get ready to sell and then use that money to give to a assisted living facility that's owned by a large corporation that's going to take their money and put it in their pocket and let the people think they bought something they did not. And then take them and rip away all the little things that they promised them they would have over time, but keep increasing the costs every year. Whereas before now, the biggest thing that's in vogue is what's called, mentioned earlier, living in your own home or aging in place, retrofitting that home to fit you and your needs today and tomorrow. So when you pass away, and you will, because everybody does, your family is inheriting the home, which is going to be way more than they'd inherit the assisted living facility. The familiarity with the neighborhood, the fact that their mind doesn't wander because they're alone, they don't have any friends, all that stuff, that goes out the door. You're at home, people can come visit you, you know your mailman, you know your paper boy, you know all of that. That's the difference. That's, they say, these memory care facilities, the people go into them and they lose their mind because, they're alone. It's like The Shining. They don't know what's happening. Now, it's not with everybody, but there's certain people that are just better being at home, and they can bring their care to them as opposed to having it delivered to them in the facility.
Wow.
So those are things that I've learned, and the money can do that. Money's an amazing thing when it's used properly. And depending on where you live, if you live in Fort Lauderdale, where I live, it's going to be more expensive than if you live in Topeka, Kansas. But it's all set up for whoever needs what and how they need it and where they get it. And maybe the contribution from your life insurance policy is enough for the kids to help and the grandkids to help, whoever. It doesn't matter. The bottom line is you want choices, right? You don't want to say, what are your options? You say, you can only go here. And that's the difference when we talk about life insurance. What are the options? Oh, you can't sell your policy because we're not going to tell you about it. So no one ever knows you can. Well, no one knows you can stay in your house either. And you can say, well, I can't afford to stay in my house. Well, hell, it's paid off. You don't have a mortgage. Why would you sell that?
Right.
That's the thing and that is the biggest thing right now in this marketplace. You've got two worlds colliding. The people that want to stay in their home and their tax basis is low because they're staying in a home that they bought years and years ago versus, who's in the assisted living facility right now?
Yeah.
Everybody.
Yeah.
Ritz-Carlton, Four Seasons, Mandarin Oriental, Marriott, Hilton. You're checking into a hotel. You can check in anytime you like, but you can never leave. Remember that famous lyric? That's pretty much what they're saying. And my mother lives in one right now, and I got to tell you, it is a literal nightmare. My mom's independent. She doesn't need any help, but she's in one that every year they take more and more things away and they drive the price up. Oh, we're not going to do that this year, but we're going to charge you more because it's a corporation.
Yeah, I mean, they're a money making corporation, end of day also. That's just nuts. And, end of day, like you said, having options and the knowledge, right, is the most important piece here. Rob, you mentioned for a moment the documentary. Talk a little bit about cashing out.
I'm glad you asked. So, again, a good friend of mine, Scott Page, had come to me and said at Christmas, my wife and I met him and his husband for dinner. And he said, there's this great documentary that the New Yorker had grabbed a hold of, and he wanted us to see it. Do you think I could get like Lisa's support? And I said, well, let me see it, right? I want to see it. So I saw 3 minutes of it and knew this was going to be perfect because I just like it. The reason I like it is it's not a puff piece where it's just how great life settlements are. It's a lot of the negative stuff too. You want to hear it all. That's real world. But at the end of the message was clear, right? That whether you liked it or not, the reality was it helped people. I mean, you can say whatever you want, but it really, really helped people. So it kind of brought me back to my roots because I came into the business, not being in the community, not knowing anything about this business. And day one, it was the craziest thing I ever heard in my life. I'll admit that by about lunchtime, I wasn't so sure I made a right decision. But by 5 o'clock that afternoon, I knew I had my first conversation with somebody who had helped. And that's why I think it'll be good because it's a different way to tell our story. It's not coming from me who's telling you it's the greatest thing in the world. It's coming from a filmmaker named Nat Nadell, who was exploring. This is how it came to be, exploring how his life was subsidized. What did his dad do for a living? And it turns out his dad was an investor in AIDS policies, buying one after the other, by about 30 of them all told. And there's 3 subjects to the film: 2 people that sold their policies, and 1 woman who couldn't get a policy, and then got one later when the AIDS drug came out, and she was able to be secure in the fact they issue a policy. So that's the story. We just showed it again at our annual conference. It was the 7th time I've seen the film total. It's streaming online right now at thenewyorker.com called Cashing Out. Anyone can watch it. It's been qualified for the Academy Awards, so it's poised to get nominated. We're hoping it does. And quite frankly, I'll be honest, I hope it wins. Because that's just going to get.
Yeah, man, I'll definitely go check it out. Cashing out over on the newyorker.com. Rob, this is unbelievable. And one thing I just wanted to mention is your focus on, right, coming from a end of day a marketing and a sales guy. If we can lead with education, giving people knowledge so they know choices to be able to be made, we can really push any sort of message that we need to in this world by starting through education. I just want to say thank you for doing that, right? Because I mean, if we don't have education, what do we have, right?
My mother and father are both teachers, so the only thing I was really good at was research papers.
Nice.
Like I would get called in all the time in high school, claimed of plagiarizing. I didn't do this, and my mother would say, "You don't understand." That's the only thing he knows how to do. I knew how to research and read and put together like a mini story of this. And education is crucial. Every education is lacking in not just our industry, in almost every industry. I learn stuff every day about my industry. I learn stuff about parallel industries, and you've got to keep your mind open to new ideas, and you got to accept constructive criticism, and you got to be able to argue in a good way that you can understand both. You get your points across, and maybe can change a mind or two along the way.
Yeah, we'll be open to changing our mind as well, right?
Yeah,
open
exactly.
to learning, change our mind. It's so important. Rob, you're making a huge difference in this world. There's no doubt in my mind, right? Especially through education. With the show being a Journey to Legacy, I'm doing a little bit of education and research around the subject myself. And so I'm curious, for an individual like you, what does legacy even mean, and what's the legacy you're hoping to leave on the world?
Well, that's a wonderful question, and I'm actually prepared to answer it because I was thinking about this the other day, having a conversation at dinner, which was I've been doing this for 32 years. And next year, as I mentioned, I'm going to be the chairman of the board of Lisa. So I'll be more of a presence, if you will, on the airways and on the internet. And it's to continue to grow the industry. And you mentioned earlier to never give up. And I think that's my legacy, is to keep promoting this uh, better than we've been doing it. That's obviously the course. We're the worst marketers in the world, as I mentioned, but I think that we continue to try. We have an honest, educational platform that explains to you. We're not telling you have to do it. We just want you to consider. And I think if I can leave on the world that I was one of those fighters, the guys that would stick my neck out there, not afraid to talk to someone, to go on somebody's show, to go onto a panel, to discuss my business, and be open to the idea that maybe my business isn't good. And if someone could convince me of that, great. I always make a joke. Then I give this list out. Sometimes I give presentations. I say, I've been doing this for whatever number of years it's been, I say, and I've asked all the financial planners and life insurance agents across America over time to give me all the good reasons why you should never, ever explore the life settlement opportunity. And I've listed them all here for you. And I pull out a board and it's blank.
Nuts.
And I go, there's no good one. I'm not saying you have to do it. I'm just saying you need to explore it. Then they say apples to apples. You can't do apples to apples if you only have one apple. You got to have the second apple.
Yeah.
So that's the legacy I hope to leave.
I love that. I love that. To keep talking about it, to keep fighting, spreading the message. Because as you say, there's no good reason to not explore it. Beautiful. Rob, thank you so much for being here. If people want to learn more about you or about life insurance settlements, where should they go?
They can go to our website, which is lisettlements.com, or they can call me on my cell phone, 954-599-4433. Or they can email me at rob@lisettlements.com.
Rob, thank you again.
Thank you, Wayne.
And that's a wrap, everybody. Thank you for joining us today. Please go check out the show notes below and reach out to Rob, because as you learned, what they're working on at Life Insurance Settlements, Inc. is literally life-changing. Here are a few of my big takeaways from today. First, your life insurance policy is an asset you own, not just a bill you pay. If you're struggling to pay it, don't just let it lapse or fall away. You have options. This was an interesting reminder for me today that most people don't actually lack resources, they lack information. Rob showed us that life insurance can be a tool for freedom, not just something you're stuck paying for that you'll maybe use someday. We talked today about resilience, about standing up to massive industries, and about why having options matters, especially as we age. And finally, I loved his definition of legacy, how it's not just about money, it's about education, choice, and giving people dignity in how they live later in life. Rob, thank you for fighting the hard fights, and thank you everyone for tuning in today. If you want to learn more about everything happening here at Journey to Legacy, or if you want help leaving your own legacy on the world, visit us over at journeytolegacy.org. Until next time, I'm your host, Wayne Veldsman, and we'll see you soon.